Let's try that intro again because I just keep foobarring this stream over and over again. Um, what's up, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. I've been gone for a while. It's been a little bit since I've uploaded. I've been traveling for work, but it's been very much mutually beneficial because my travel for work was to Vegas. My company has a plant in Las Vegas, and there was issues that I was able to take care of there, but I got to spend a couple weeks in Las Vegas, and I have family there, so it was good to see family. I haven't seen my mother in like 4 years, so it was very nice to be able to see my mother and my brother, so that was awesome. There's a lot to go over. There's a lot that's been happening recently, especially in the markets. So we're going to hop into the markets, but if you get a chance, subscribe to the channel, like this live stream, and subscribe or follow me on Twitter, Mark the DGT on Twitter, and we're gonna hop in first to the DXY. So we're gonna take a look at the DXY on the weekly chart. And if you're not familiar, the DXY is the dollar currency index, and what this shows you is essentially it's going to be the U.S. dollar against equities, against other currencies. So with that being said, we are at an area now where I'm going to draw this line here where we kind of topped out. We'll keep this red for now because we haven't made a break across it, and this is $4 or $104 even, and 104 hasn't been breached in 20 years. December of 2002 was the last time the DXY was over 104. This is extremely critical to keep an eye on this because equities, the Nasdaq, the S&P 500, cryptocurrencies, everything, as long as the DXY continues to grow, continues to expand, equities will continue to fall. We saw some rough days recently. I mean, look at this big growth here on the DXY. This was over the past week, or 2 weeks ago, and then this week, more growth. But as this continues to grow, you'll see an inverse effect on equities. So I want to get that out of the way first, and just let you guys know that 104 is a critical level, and we will likely see it. If it clean breaks this level and then tests it and becomes a support to where it will grow beyond that, and if we get to like 106, 108 in that range, and that's ranges that we haven't been in since 2002, that could create a very, very steep dive down on the Nasdaq, and especially on cryptocurrencies, because crypto is going to be the farthest end of the risk tolerance spectrum. Right now we are in a risk off time frame, or we're in a risk off time, with inflation being very high and the DXY going up. Everything is about minimizing risk, and the highest risk assets are cryptocurrencies. That being said, we're going to take a look at the Nasdaq. The Nasdaq, I know a lot of people don't like this, but crypto has been, especially Bitcoin, has been following the Nasdaq. It's been very much correlated. So we're going to bring this down to the daily time frame so we can get a good look at this on the daily. And at a point last week, I thought we were going to get a double bottom, kind of a double bottom bounce, because we had obviously broken the uptrend. And I want to go back and draw a trend line here so you can see exactly what I'm talking about. This big V spike down here, this was March of 2020, and we all know what happened in March of 2020 when the economy shut down for COVID, and that was that big spike down. But since then, we can run this, and we can see that since it started to run up, we had this kind of long uptrend. And since that happened, we never really got below the 50-day moving average, and if we did, it would only be for a day or two, and it would spike back up above it. Now, it broke down completely in January. In January is when we start to really get our really bad lows. And all the way back until the beginning of March is when we bottomed out the first time. And we had a nice little relief rally here. This kind of V-shaped correction was a relief rally, but I want to show you something really quickly. Now, a lot of people don't A lot of people don't realize this when it comes to using the Fibonacci retracements, is that you can Fibonacci up or down. So we had our peak, and we hit a bottom here, and we had a Fibonacci retracement just about to the 618 retracement level, and now we're going back down. This was a retrace just like you would see on the way up. You see retracements and you see things along those lines. You have to be able to see that a retracement is going to be a correction of the trend. So the trend is down, so all our retraces are going to be to the upside. So now we just broke back below the zero line, and if we take a Fibonacci extension on the NASDAQ and we go from our top to our bottom to where we retrace to, typically a target's going to be at 1.618 on the extension. This is how far you would look to extend, especially going up. This is the target that you would take if you're trading off of Fibonacci levels. You would want to get an entry at the 618 retrace, and then try to exit the trade at a 1.618 extension if possible. Now, what this will do, if this were to come to fruition, this would put the point of bottom. This would put the bottom of the bear market, the bottom of, essentially at this point, this would turn into a recession, and this would put the bottom of the market right near the tip of the peak prior to the COVID dump. And this would be almost like a reset, almost like the entire 2 years from the start of COVID until now, almost like that whole run never happened. I mean, obviously it did. Obviously the market did go up, but it would almost reset the market back down to the pre-COVID levels. And I wouldn't be surprised to see this happen on multiple indices and cryptocurrency as well. So we are going to look, now we're going to take a look into Bitcoin. I think on Bitcoin, we know that we've had some rough down days. Bitcoin has been going down, obviously for months, but we had this really kind of sideways trading after we bottomed out at 34, or actually we bottomed out around 33K, and then we've been going kind of sideways, slightly up. But the big thing to look at, if we kind of zoom this back a little bit, is that the volume has been tapering down. The volume's been really low. Low volume, low trading volume. There's not a whole lot of money in the market right now. There's not a whole lot of buying pressure or selling pressure, really. So without volume, I don't expect there to be any type of big pumps to the upside. I don't see any type of large moves to be had, especially anything to the upside. So keep that in mind. Right now, the money in the market is just not really there. There's not a whole lot of volume compared to while the price was running up. While we were getting the price up, we were getting substantially more volume, 3 to 4 times the average. Even on the days that were low volume, were much higher than our current average days. So right now, I'm looking for levels of support and resistance where I think we could see price get to. And I think right now we're looking, the safe bet right now is going to be looking to the downside. I don't see anything going to the upside, especially with the rest of the markets, with the economy, the U.S. economy, the inflation rates. I don't see a whole lot of upside. I don't think there's a move. Now we could get a bounce, but I don't see a move going up to reverse the current downtrend. So the first thing I'm going to look at is I'm going to look here back in the summer of 2021. Look around 29.5, and around 29.5 is where I'm going to be looking to see a support line. This, I think, will get tested relatively soon. I think it could get tested relatively soon, and then after that, the next big one is going to be right around 19.7. And that might sound really low, but I'll show you why this actually isn't a wild suggestion to get to this point, or to get to this price. I'm going to take this to the weekly. I want to show you two things from the weekly. On the weekly chart, the price of Bitcoin has been bouncing between let me take the 7-day moving average off of here. There's no need for a 7. But it's been bouncing between the 21-week moving average and the 50-week moving average. And this week may be, within the next 2 days, may be the first time that we close under the 50-week moving average since the COVID dump. So we go all the way back to the COVID dump here, back in March of 2020. Now the reason why that's important, I'm going to zoom this out a little bit, because once we go below the 50, every bear cycle prior to this has touched the 200-week moving average. And again, I use smooth moving average, SMMA. I don't use simple, I don't use exponential, I use smooth moving averages. It just, for me, it seems to work. It smooths everything out a little bit better. It becomes, it gets rid of more of the noise that you would typically see when you're looking at trying to gauge moving averages. But I'm gonna go all the way back, and this is, I'm not sure, Bitstamp. And the reason why I'm using Bitstamp is because it's the oldest one I've been able to find on TradingView, and it goes back far enough to where I can get a good look. So I'm just going to take a look at the first big bull run up, and we're going to do a Fibonacci retracement, and we'll see that the 200-week moving average got touched. And again, it was probably touched back here, but it didn't get actually created until June of 2015. Now, if there was an older exchange that had more data going left, this 200-week moving average would have been farther back. But that's why I chose this exchange, because it was the oldest one that had the most data and would be the most accurate 200-week. So this bull run ended up top here at a blow off top at around $1,300, and then came all the way back down to $220 beyond the 786 retracement. Now if we go from that bottom to the next run up, we get up to the 2017 bull rally, or the bull run, and then we get a little bit beyond a 786 retracement, and we touch the 21-week moving, or the 200-week moving average, excuse me. We touched the 200-week moving average here in March of 20, and that was near the bottom point. This was actually the bottom point, but the touch was here. Again, slightly below the 786 Fibonacci retracement, and then we can do this one more time. We'll go from the 2020 point to the current top, and that puts our 786 retracement right around where the 200-week moving average currently is, around $17,000. And I think that this will continue to rise a little bit. Obviously, we're still trading above the 200-week, so this is going to continue to rise slowly as the weeks progress. So I think that this will actually get touched around $19,000, and I think that's going to be the very bottom of this bear market. Is going to be around $19,000. So if you're somebody who's looking for a set it and forget it price, and if it gets hit, you can just kind of take it to the bank and go take vacation and not worry about it for 2 years, because if you get 19,000 on a buy order, everything in history will tell you if you get this buy order, you're looking at a massive increase. I mean, the first time, if you got it in 2016, by 2017, you were up just a little bit, 8,500%, just a little bit up. And if you got it in 2020, if you got it at $3 grand and you sold the top here, you're up, a cool 1,700%. So again, these are massive gains on a long-term scale, and you're looking at holding for over a year, maybe two, for this cycle to complete itself. So at this point, I can't say that if you're somebody who wants to just be able to kind of dollar cost average and just buy in small amounts, you know, every week, every paycheck, whatever, you're fine to do so. But if we're looking to make a big move, and again, this is not financial advice. I'm sorry, I'm not a financial advisor. I should have led with that. But um, you know, in my opinion, what I'm going to be waiting for is I'm waiting to see a 786 retracement. I'm waiting to see that large move on the weekly, that large break below the 50-week moving average, because this week here that we're currently in will close on Sunday and will likely close below the 50-week moving average. And once it does, there's a good opportunity that within the next 2 to 3 weeks there will be a massive, just a cascading downward pressure, a cascade of sales. That'll be the capitulation. And what typically happens when you hear the term capitulation, if you're not sure what that means, that's typically when you have long-term holders, somebody that bought and was holding and holding and holding, that eventually sells their positions for losses. They just get tired of holding it and they get, you know, they lose hope. And that capitulation might be somebody who, you know, maybe it's somebody who bought in, bought in July or June at 30K, and they don't want to lose. They don't want to have any losses, so they sell. And you get a cascade of sells, you know, from 35 down to 30, and then that breaks that kind of that old support here at 29K. Maybe you have somebody who bought near the top, and you know, bought in September or October, November, 50 or 60K, and they're watching their money get cut in half, and they're just like, I'm done. I'm not watching this anymore. I'm getting out. I'll take half my money back and just go do something else. And that's when capitulation happens. It's that loss of hope. It's when people think that they're going to go to zero, and when people are worried about losing everything is when they pull out that little bit, and they'll pull it out right before it goes to start spiking back up. That's unfortunate, but that's how the markets typically work. But again, with Bitcoin, I do expect another 786, at least 786 retracement, and a touch of the 200-week moving average, and quite frankly, that this will be the first time ever that Bitcoin and cryptocurrencies at all have experienced a U.S. recession, a recession in the market. We had one in 2008, and that kind of prompted the creation of Bitcoin and cryptocurrencies to try to be, you know, a hedge against, you know, really bad institutional banking and stuff like that. But we don't know how it's going to respond to a recession. But I can tell you that as long as the DXY is climbing, and as long as the NASDAQ continues to fall and equities continue to fall, Bitcoin will fall, because at this point, crypto is still seen as the farthest on the spectrum of risk. It is the highest risk. So if the market is risk off right now, risk adverse, then you know, Bitcoin is going to continue to fall, and cryptos and altcoins will fall sometimes exponentially harder than Bitcoin does, because there's already less faith in the alt market, because let's face it, a lot of alts will not survive this crypto winter or this bear run. There will be a lot of coins that just disappear. They just lose funding, lose interest. Their devs give up, you know, whatever the case might be. But there will be coins that just disappear. So you know, that's the big kind of long, broad take for crypto right now, for Bitcoin and the NASDAQ and the DXY. So I've only got a handful of people watching, so does anybody have an altcoin or anything they would like to see an analyst on, or even like a long-term analysis here? Like if you have a favorite coin and you're thinking like what might the bottom be, let me know. Okay, yeah, so the MACD, actually that's a really cool thing to bring up, because the MACD actually did the same thing, and Crypto Brando, who is in our Telegram group, he actually called this. He called this while everybody was watching the MACD on the weekly, and we see like everybody was waiting for this curl, this crossover, the cross to the upside, and he was like, hey, this same thing happened in 2018, and it faked out. It only curled up for like 1 or 2 weeks. And then that was where the big dip happened. So here, you know, we had this long downtrend off the top, and we started to go sideways, and it looked like the MACD was going to cross over the top. and then it just went totally flat sideways. And this is actually, I'm really glad you brought this up because this is something I was looking to talk about anyway. Where's rectangle? Um, the time here that the MACD was totally sideways and was kind of back and forth between green and red, really flat, was the time in 2018 that the price was trading between the 21 and the 50 week moving average until it broke below the 50. And then the following week it had a massive, this week, right after it broke below, the next week it lost 30% or it lost 29% in 1 week after the 50 week broke. And that was kind of almost immediately the bottom of the or close to the bottom of the bear market before we start to see a return. So here, very, very similarly, you know, we're trading between the 21 and the 50 week moving average, and we just broke below the 50 week moving average right after we had a fake out to the upside. And that's another thing with crypto, another thing that, you know, one of the best pieces of advice I can give you is that the first break is typically not going to be the direction that it actually goes. Like here, it looked like it was gonna, it broke above the 21 week, like it was gonna go back to the upside, like we might start a fresh bull run. And it didn't, it fell straight back through. And it fell through so fast, you know, just week after week of red candles that it's now going to close below the 50 week. That MACD, all the indicators that we use typically are going to be lagging indicators, which means that you can try to use them predictively, but they only tell you what has already happened. They're not really, they're not predictive in and of themselves, but the cross is typically, you know, you see that cross, and typically it means the move is not so much that it's already happened, but if I'm using the MACD, I want to see this curl. I want to see this hook. This is to let you know that the bottom has been in, and that, you know, you're looking to start moving to the upside. But again, you still have to be careful because there's always going to be the potential for fake outs. And even here, you know, it looked like the bottom was in, and we start to get some pressure to the upside. We start to get some movement up, and we actually broke below the 21 week. And on a daily, I'm going to kind of zoom this in a little bit. On a daily there, yeah, that's where we had that kind of this nice spike here where we thought we might have gotten out. I mean, this was a 30% increase over the course of, you know, 2 weeks, 15 days, and we got 30%. And this is when, you know, everything was starting to spike. You know, pretty much the month of March, or the last 2 weeks of March, looked really good. And then from, you know, April 1st on, it just fell right back through. So again, like now on a daily, I honestly thought, I'm going to cut this off real quick. I think a lot of people were wrong with their draw on Bitcoin on daily. I saw a lot of symmetrical triangles, and I saw a lot of draws that looked like something like this, which this would have been accurate. I mean, it was accurate through the first moves in the breakout, but typically a fake breakout of a move won't be, you know, 2 weeks out of this pattern and then back into the pattern. That typically, for me, would tell me that the pattern has been invalidated. So I don't see this as ever having actually been a valid pattern. What I saw from it was more of a traditional bear flag. Let me get this right. Where I was seeing more of a parallel channel, kind of something more like this. And then if you take your flagpole and you just take a trend line and run it down, the current trend down, you know, that's kind of a traditional bear flag. And the expectation was, I was expecting a break to the downside because, you know, based on everything else I had already talked about earlier, I wasn't expecting Cardano TA chart. I'll take a look at that. I'll take a look at that for you. But here, you know, I wasn't expecting a break to the upside, breaking out this channel, but I did think we would get another move like up towards the middle of this channel before we broke out of the bottom. So that was actually tough because I think I put a long position and actually got wrecked in a long position um, right after. Yeah, the 3 days ago or 4 days ago now, when we had that 5% day, like after the previous day touched the bottom of my support, and the next day start to buy up, I put a long position and that was good for like that first day, and then it just collapsed on me, and I actually ended up getting a stop loss. I should have put a profit stop in, but I did get stop lost. I think I lost like 40 bucks or 50 bucks in a trade. I think it was uh, like 10% I lost on it. But yeah, we can take a look at we'll take a look at ADA. Let me clear out all the old things I've done, and can I go from the start? We'll do a fresh TA on ADA. So I'm looking at ADA now, and the first thing I'm going to try to do is see the current trend line and say that our trend is looking something like this. And then we're going to try to find support and resistance areas. So I think we got a pretty steady support resistance line here. And what I'm seeing here is it was support here. It broke through, got retested, became a resistance, fell off, and then it was a resistance here for a few weeks or for a few days. So that's I think that's a pretty good support resistance. Even here, it was a resistance before it broke, and then held as a support a couple of times. And then because I believe the market's going to continue to go down, we're going to do we're going to go further down. I don't think we need to really go up. I don't think we're going to test $1.25 again or $1.57, but these would be next levels of resistance. Yeah, longs, you have to be in a position where you are willing to get out very quickly with modest gains. Longs right now need to be short term. They're longs only by name. I'm thinking definitely a support resistance line here. Yeah, it looks like ADA may have actually just broken below this here. It might retest this area. I think 76 cents or 78 cents was the support resistance line. That was a low. That was the absolute lowest that we had here at 74. I'm going to put another line here at 74 because this could actually be an order block. So I'm going to turn that green because I think that's going to be our first like major support. And this could be an area where there's large long positions, people buying at this level, saying that 73 cents they're willing to buy large amounts, and they think that's going to be the bottom. And there's a lot of buying pressure to keep making sure that price does not go below that. So I think that's a key level to watch, because after that I don't see a large support range until about 45 cents. I mean, you're looking at, this is where you got to really kind of go left, and you see that ADA doesn't have much area of trading. Like, it's never traded in any of these ranges outside of just plowing through them and like just running through these ranges. So that's what's kind of scary about ADA right now, is that there's a potential that once 73 cents breaks below, there's not another level of support that's already established until you get down to 44, 45 cents. And then again down here at 38. So I mean, this would definitely be like a support resistance range here. And then you probably have another one down here around 30 cents. But I mean, I don't know if ADA gets this low, but I wouldn't be surprised if altcoins did take like a 80 to 90% total loss from their all-time high. So if we go from all-time high and come down, let's say 90%, then some will actually go as far as like 95 to 99%. about 90% for ADA would put us right there with the 30-cent support resistance line. It's actually incredible that it just happened to be right there. So yeah, I don't know that it gets down that low, but it's definitely, I think that's the lowest potential. I think if you were to say, I really like Cardano, I really like ADA, and I think I want to buy as much of it as possible, what's the best possible price to get in at? I would say, 31 cents. And then if the market corrects and things flip up and it never quite gets there, and it bottoms at 38, or if it bottoms at 45, I mean, hell, even if it bottoms at 73, you're still at a potentially really strong spot, even at 73 cents. But if we go back from the March dump, just like we did with Bitcoin, we do a Fibonacci retrace. The 786 line is just a little bit below. It's at 69 cents. So it's just a little bit below that 73-cent order block. And I wouldn't be surprised if this was an area that was very hard to break below. And on the weekly, there's likely not going to be a 200-week moving average for ADA. No, it's not even going to show up. The chart doesn't go back far enough to give us a 200-week. But it did currently, and this is kind of ugly here too. I don't really look at ADA on the weekly, but it broke below the 21, broke below the 50. That kind of big run up where we had that 2-week run up was a retest of the 50, and then a evening star reversal pattern to come back down. That's a little scary. The only thing I would say that you could hope for a long position is that if you get a nice reversal back off of here, this could end up being a double bottom pattern. But I don't know that, I don't see anything running independently. So if everything is still going down, this likely won't reverse, but you could have a double bottom where you get back up, something like that. But that's going to be kind of that's going to be wishful thinking, and you're going to want to definitely pay attention to this area. I would not enter a long position for ADA unless it gets back up to $1.25, and that's where I would enter a long position. If I'm trading ADA, my long position would be back above 125 and do this big double bottom. Or if it breaks this and holds this as a support line, then you're looking at a potential for 145% increase, within 3 to 4 months. So yeah, that's ADA. I'm surprised, I was kind of hoping some of my Raven Corners would be in here, because typically I do Raven Coin analysis with Bitcoin, but none of my Raven Coiners came in to watch. So Miss Pimentel, I hope I'm pronouncing it correctly. Anything else? Cardano Scaling Solutions. Yeah, that could actually help it out. There are definitely potential coins that can stand out during a bear market, and get a lot of gains because of news and things that they're doing. The last bear market actually Link did very well during the bear market, in comparison to most of the market. Raven Coin is another one like that because of the halving that happened in January. The overall supply will be lightened. The amount of Raven Coin coming into market is cut in half. So 6 months of that, half the amount coming in, should eventually start to positively react with the price. The price should start to go up just from a lack of supply. But yeah, ADA definitely, I would definitely keep an eye on this, especially if the weekly plays out. Unfortunately, the that doji, that kind of gravestone doji here, um, is a typically a bearish candle, but it's at the bottom, so it's not something like it was rising. This just shows that there was the attempt at buying pressure this week. There was an attempt at a buy up to get prices up, and it was sold back down immediately within the same week. So that typically will show you that the bears are still in control. And there's a little bit of bullish divergence here. So a little bit of bullish divergence. We have this low, and then now we have a lower low, but the RSI went from a peak low to a higher peak low. Now this will only apply, this will only be a XRP. Okay, we'll do XRP next. But this bullish divergence, and this is something that a lot of people I think get wrong with divergences, is that this divergence will only play out if the low doesn't continue to get lower. Like if this keeps going down and the RSI keeps going down and eventually breaks this low here, then this divergence never happened. It's only a divergence now in assuming that the price will go up. So this could be a bullish divergence for 88, which could cause some nice price action. All right, XRP. Oh, that's right. I was looking at XRP actually recently. I think I sent it to the group. But XRP has been in a long consolidation period. And yeah, minus this one day where it moved like 75% in one day. It's been it's been in a long consolidation and everything's tightening up. You see the bottom is actually rising, so our lows are getting slightly higher as they go, and I'm going to leave this as an outlier. I don't believe that this candle, I don't know what that was. Oh, that was December 4th, so that was that tower dump at midnight on that Friday. So minus that candle, the bottoms have been coming up. So we've got an ascending support line, and we've got a descending resistance line. I haven't been following the court cases with the SEC, but I think I think XRP is one that could buck the trend of the market if they get really good news. If the case is just over, and XRP wins, and it's just no more trial, no more nothing, and everything is all said and done, XRP could definitely like fly. QBeats can't hear me. Like, is it just low, or is there no sound at all? Because I am watching on my phone as well. I can hear myself on my phone. Rebecca, is there any issues with sound? Oh, what's going on, Marquise? I'm sorry, I will have to. Yeah, it is lower than usual. This is the first time I'm not using my GoPro mic. I typically record in two separate channels. Like I'll screen share, and I'll use my GoPro mic to not have to use my headset. My computer headset is kind of garbage, so I will have to get a new headset for that. Um, but yeah, sorry about the audio quality. That will get addressed. And if I have to, I'll just start making regular videos and use the other mic. But yeah, for XRP, it's really hard to say. Like, this will break down or break to the downside, I think, if it continues to follow the trend of the market. If there is some type of crazy news where XRP, like I said, wins their court case and there's just no more negative anything with XRP, then it could definitely fly. You know, if you guys were around crypto in 2016, 2017, when the 2017 bull run was happening, there was a point in time where XRP was number two. It flipped Ethereum, and people thought that XRP might actually overtake Bitcoin. XRP has always gone opposite the market. I'll have to keep an eye on that. You know, there's always good to have a contrarian in your pocket, so that you know you always have something that can be a little bit different. But yeah, I will start to watch XRP more. I noticed this triangle on it, and just to set the market and kind of keep keep an eye on it. But also, if you take a trend line, if you're not aware of this, if you take a trend line and you just draw your trend line on TradingView, you can set an alarm on it, and it actually like text you when it crosses above a trend line. So you don't have to watch your TradingView all day long. Like now, I know if XRP were to pump up and cross this trend line and break out, like I'll get a text and I'll know, okay, cool, I'm gonna check out this this XRP breakout and get a long position on it. So, um, no. So yeah, I'll keep that there. Yeah, that's also what I want to do with live streaming too. Is that I wanted to start doing um, some breakdowns on TradingView and like all the different tools, all the different little kind of tricks and things that you can do with TradingView. And one of the things that I really enjoy doing, um, I have a premium. Um, I don't remember what tier it is though. I do have a premium account, but I don't know, and I don't know that I can get into it without looking and seeing like private information and stuff. So I'll check it out, and um, all of the tools I think should be available even on free. It's just the amount of indicators you can have, and there's some indicators that aren't available for the free version, but all the tools should still be there. One of the ones that's really cool is the bars pattern, where if you see something that's like repeating itself, you can say I want to go from here to here, and take that and say, okay, that happened again right here. I mean, that's not the case, but like when you see those kind of fractals, those things happening that are repeating themselves, you can kind of test it. Only 3 indicators at a time and 1 alarm. Okay, yeah, the premium you can set like, I don't know if there's a limit to alarms. I've had up to like 8 alarms set at one time, and I never got a notification that I was at a limit or anything. Alright, look at, yeah, I think I'm gonna get ready to call it here because it's been about 45 minutes. No, actually, I got home. I got home this week, Sunday. Actually, I tried making a video on Tuesday, I think, and I recorded it, but I was so tired by the time I got done recording that like I didn't have the energy to edit it because I was so jet lagged still. Like it took me almost a whole week to get myself like back to normal in timing. But yeah, I think I'm gonna call it here. But I definitely want to continue with doing the live streams just to be more interactive. Hopefully, as I do it and kind of keep a constant schedule, Monday, Wednesday, Friday, and then when I'm not live streaming, I can put together some little videos and stuff. Um, oh, absolutely, you're absolutely welcome. Uh, I feel like being more interactive and you know, kind of being able to go in real time and answer questions and things like that. There's always things when I do a video and I'm editing or I'm doing multiple takes in a video. There's something that I said in one take that I forgot to say in the other take, and then it's just left out of the video, and I forget that it was left out. So we're doing it live. Like questions will jog my memories and stuff. Yeah, definitely. I'm doing Monday, Wednesday, Friday, midnight for me. Timing sucks because I work Eastern time, and the East Coast I work 2 p.m. to 11 p.m. So midnight Eastern is late for a lot of people on the East Coast, but it's better than doing it like at noon when people on the East Coast are working and people on the West Coast are just waking up. So yeah, I'm gonna go ahead and call it here. Thanks for checking it out and thanks for sticking around the whole time. I really appreciate it. And as always, until next time, peace.